Hello everybody and welcome to the midweek market update from Smack the Markets for the 29th of January. Now, so far this week we've seen relatively strong index market price action, and a lot of those index markets that weakened off significantly over the weekend on the back of the spread of the coronavirus have seen quite a bit of strength in the first half of this week. Now, the coronavirus is still a big issue for the markets, although there does seem to be some sort of controls coming in various parts of the world to manage that. We've got the Fed interest rate decision as well later on this evening in UK time. So that's going to be quite an interesting focus for the markets as well. So let's take a look at a few markets here that we've been keeping an eye on since Monday's newsletter, and some of the opportunities that we're looking at going into the second half of the week. Now, if we take a look at the Dow Futures contract here, and take a look at where the market was on Monday. So on Monday, the market was, when we did the newsletter, the market was contained within this sort of range here on the sort of 4-hour time frame. We're looking at these two sort of levels as key decision points as to whether the market was going to make a run for the gap close here and break above the high. So we got that trading window to the long side there, which is some sort of 250 pips or sort of 150 pips odd there, or whether the market was going to roll over to the short side here and continue to weaken off and close the window down here. Now, we can see what's happened. The market has weakened off, but since then it's strengthened, and we've seen a bit of a structure here of a long trend forming here on the mid time frames. Now, certainly at the moment, the market is midway here between closing the gap on the Dow Futures. So still plenty of distance to go. And on lower time frames, this is sort of looking quite sort of an interesting trend at the moment. So as long as this trend stays intact, we've got sort of relative support here now, where the market sort of opened at the beginning of the week, which is around that sort of 28,717, which is also a bit of a structure level here, as you can see. So as long as the market stays above this level, we'll be looking for a continuation and a possibility of a gap close there. Now, talking of gap closes, we can see that the Dow there has still got some distance to go. If we have a look at the S&Ps, we can see that the S&Ps has basically closed the gap overnight, and the NZDCAD future here closed the gap yesterday. So we can see that the Dow is the lagger behind here, but we have got that sort of open interest, and as long as that long trend stays intact, we'll be looking for a continuation of that strong move. Now, we also looked at gold here on Monday, and what we're looking for was we're looking for the gap here on gold to get filled, and then looking for sort of long opportunities. Well, what's happened here is the market did sort of sell off a bit more sort of steeply here. We had a bit more sell off in precious metals. The gap is now sort of clearly closed, and the market sort of pulled back somewhat further than what we initially sort of thought, certainly beyond that sort of gap close level. But again, just starting to look at structure points here on gold. The market's back into sort of rather interesting sort of place there on the 4-hour time frame, and we've certainly got some bullish action coming back in. Now, if we take a look at this on the daily time frame, you can see that the market has just basically pulled back into the moving averages, back into that zone where historically it sort of found support, and the next leg of the trend has rallied from. So it looks like we've got some buying action coming back in here. We'll certainly be looking at long precious metals for as long as these sort of trends stay intact. Now, we also looked at euro dollar on Monday. We were looking for short opportunities on this, and for the move here between the 110.20 level, if I zoom into this, the 110.20 level down to the 1.1 level down here. Now you can see what's happened. The market has cleared that nicely. It's achieved that 1.1 level, rebounded back up to the higher structure level, then retested it again. So we've clearly got that sort of window closed now. So the question is, where next for euro dollar? Now, from the context of trend and higher time frame structure underneath 1.1, well, we've got sort of quite a big trading window to the short side. We're sort of kind of running out of potential support here. So there's not a great deal, of strong support through here. I think we've got a couple of levels possibly, but then we're getting down to this sort of like 109 level, and there's plenty of distance to the short side. Having said that, the market's had a very good run. It is looking a bit sort of extended, so I wouldn't be at all surprised if we see a bit of consolidation before we start to see the next move. Now, another market here that we're also keeping a close eye on is Kiwi CAD. Now, Kiwi has been inherently weak for some time as a currency, and it's starting to look rather interesting against the CAD here. If we just take a look at the higher time frames and take a look at the monthly chart, for example, you can see that the market here, whilst it's not a wonderful trend, it has rejected off this level where the market's found key support and resistance before. So we're selling off that that level and seeing weakness in there. We bring it down to the weekly chart, we can see that the market sort of rolled over here with a lower high, and now sort of breaking through this level here will make a lower low. So again, starting to see the formation of rejecting this level, but also, and this is a new level, by the way, on the weekly, because the monthly was higher up. But you can see this is quite a clear level here on this lower time frame. And again, if we start to come down the time frames, even coming down to the daily time frame, if we zoom into this, you can see that this sort of 86.05 level, 86 sort of level has been key support before, and the market's just really trying to push down to break through that at the moment. There's a next sort of window here down to around that sort of 85.50 level, and if we just sort of zoom out, you can see that's the next sort of step of support structure for the market. So again, looking for sort of weakness there in Kiwi CAD. If you just come down to 4-hour time frames and sort of zoom out of this, again you can start to see the structure of the markets, and it's just sitting on top of that sort of breakout level at the moment. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of the week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.